Success is simply a matter of luck. Ask any failure. Earl Wilson. My friend, success in our business here at chartingwealth.com, learning how to chart these markets, how to use technical analysis to help you make the right decisions in your practice trades. Remember, we're not a stock calling service, we're an education firm, but we follow these markets every day. 10 to 15 minutes is all we ask, but it is on a daily basis. You will not learn the nuances if you don't practice every day. It doesn't take long as far as your practice goes every day. It might take a while for you to get down the patterns and understand the knowledge and gain the wisdom you need to do this right all the time or close to it. But again, 10 to 15 minutes a day, as long as it takes, you've just got to dedicate yourself to it, and it is fun. This is one of the most fun things I do in my life. I do this every day. I come to you every day. I've done this for years. Why? I like sharing this material, and the fact that doing this show makes me get into the market every single day to follow it, to learn what I've learned. And what have I learned over the years? Well, I've learned the price percent oscillator and how it is magical in the weekly vertical crossovers that we see that show us huge changes in trends. They work over and over and over again. How do we know that? Because we track them, and on the 4 ETFs that we track every day, the S&P 500, the NASDAQ 100, 20-year bonds, and gold, we have had 13 of those this year. 13 weekly vertical crossovers, up or down. They have all worked but one. And that was in the prior run-up to gold. And man, has it done it for us. This last run-up in gold was beautiful. But look at these charts now. Look at the portends we see. Look at how the week is starting off on the S&P. We're already crossing through our prior trend line, weekly trend line. Same with the NASDAQ 100. Look at bonds and look at gold. It's crossing over too. What's happening in this marketplace? Well, let's jump in to the minutia and see what we can find. As I said, we'll start with the S&P first. On the weekly chart, look at what we see. We had a beautiful up move that went on and on and on all the way back, starting in early May, going all the way through. Now, we did have a 2-day crossover pull this out, but got us back in going up, a 2-day recross back in early August. And of course, it's been beautiful up until the last few days also. But as we look at things, we see that the price percent oscillator not only went flat last week, but as we start off this week, it is heading decidedly down. Now, things could change. There could be something crazy happens as far as the Fed goes, or the president saying something to buoy markets. But right now, we're seeing a lot of downward pressure just with the start of this week and the end of the prior week. We have seen our 2-day trend line violated and our weekly violated. Now, that's just the first day of a 5-day candle, so things are subject to change, but we're paying attention. Derivative oscillator going into its second week of losing momentum. Look at the 2-day chart. Now, the prior 2-day candle ended on Friday. Remember, markets were not open on Monday, so this is the first day of the latest candle. It is a decidedly strong down candle pushing through the weekly. We already dropped through the 2-day last week. So again, we've seen things go from green to red on the derivative oscillator, price percent oscillator, hammering down. And of course, look at all that red blood in the water starting after the last up move that we saw in the market last Wednesday, the 2nd of September. Since then, that was in the afternoon, since then we have seen strong down movement, just tumbling. Now, as far as that prior 2-day went, we had a nice run up on that. It has ended. We've talked about that previously. It's clear to see. Now, again, it hasn't confirmed with a crossover going down, but my friends, that is even if it were a great day tomorrow, it could pull back through, but not very likely. We don't call a candle till it's finished drawing, but it's a pretty strong down candle. And of course, taking your profits at any time on these up moves is always your call. That's where we are on the S&P. Let's go to the Qs, the NASDAQ 100, the tech stocks, which had just been flying up. We saw a slowdown on that last 2-day candle ending Friday. Had a red open box, a slowdown in the up movement, went flat on that weekly chart. We saw that there at the end of the week ending on Friday. We saw that latest weekly. Did I say 2-day? I may have said 2-day. I meant weekly. We saw a slowdown in the up movement then. And then, of course, we have seen starting the week off with a red down candle. Look how close that price percent oscillator is on a Monday to crossing over, going down. Derivative oscillator still positive, but lost a lot of energy. Go to the 2-day. There we go. We see where we had a strong down movement Thursday, Friday, and then of course this Tuesday, market's not open on Monday, as I said before, pushing through. We already blew out the 2-day trend line previously, and this so far, Tuesday's down movement has really knocked down and through. So we see what looks to be a 2-day crossover going down, not a recross. We look at the half-day chart, and of course, similar to the S&P, strong down movement. So again, what's happening? Are we going to have a repeat of what occurred back in February where we saw all that strong down movement? The market, as far as the NASDAQ 100 goes, has gone way, way up since then. But again, it's got a long way to fall. What goes up must come down. Are we calling that yet? No. We're just pointing out down for the day 4.81% on the NASDAQ, down 2.73% on the S&P. So we're paying close attention. Might have some shorting opportunities soon. We'll wait. We will see. We'll call it when we see it. Now, what do we see on bonds? Well, it's interesting. Look what bonds did while the market was crashing. Bonds slammed up, in fact, peaked way up back on the week ending Friday the 13th of March. And then, of course, slid sideways, dropped over that next week, peaked up a little more, didn't go as high as that prior big wick on that week ending the 13th of March. Went down for a while, up for a while, and then we see bonds going down, up for the day a little bit. Price percent oscillator still going down, derivative oscillator still going down. Look at that 2-day chart. We can see where bonds bottomed back on Monday the 31st of August, sort of up since then. However, price percent oscillator on the 2-day is flat, derivative oscillator still negative. We'll keep an eye on that. What do we see as far as the half-day chart? Well, up and down and sideways. So we'll continue to watch, pay attention. Remember, we still are in a confirmed down move on bonds on the weekly and on the 2-day, so it's going to take a lot of 2-day energy to rotate that weekly back over. It might be a while, before we see anything crossing over going up on bonds, but we'll watch. When it happens, we'll be here. We'll take our time. We'll call it. What do we see on gold? Down for the day, 0.19%. What did gold do back during the COVID crash? Well, it went up through February and then down the first 2 weeks of March, if you recall. Well, actually the 13th and the 20th of March, those 2 weeks ending those 2 days, and then back up again. So again, and then reached its high all the way back on Friday the 7th of August, and then sliding sideways and down since then, starting the week off trying to cross over going down. We'll see just what happens there. Again, gold might do the same kind of thing, stutter for a bit, and then maybe get some more energy. Don't know. That's what we see right now. Price percent oscillator trying to cross over going down just the first day of this 4-day week. Derivative oscillator also going negative. Look at the 2-day chart. It's been going down for a while. We were hoping we're going to get a 2-day recross going up. That hasn't happened. It's testing that recent low again. And we see the price percent oscillator heading down. Derivative oscillator still losing some downward momentum. What do we see on the half-day chart? Sort of where it moved down. Maybe it's trying to find a bottom. Maybe not. We don't know. we'll just watch, wait, and see. Thing to keep in mind is that on gold, we won't have a confirmed crossover going down until the end of the week if that does occur. Something to pay close attention to. 2-day is down and the half day is down. Folks, that's where we are as we end the day. Interesting things going on in the market. It has been very, very good to us this year. How's it been good to us? It's been trackable. That's all we care about, trackability. If it goes up, that's great. If it goes down, that's great. As long as we can track the up and the down moves. If you can tell the way the market's flowing, your favorite stock is which way it's moving, and you can track that, my friends, that gives you opportunities. Opportunities to go long, opportunities to go short in your practice trades. By going short, we mean looking at an inverse fund. If the S&P starts to move down strongly, how about SH? Look at how it's been going up the last few days as the market's been going down. It's the inverse fund. It's the short of the S&P. It's one of many. There's some that are inverses times 2, times 3, those we're not all that interested in. The fees and the repricing and all can really eat it up. But we look at SH. We also have a short fund, and there are others on the NASDAQ 100. PSQ is the short of the NASDAQ 100. We pay attention to that one also. And of course, you can also, if you haven't taken our training that we have in options, for all of our Patreon supporters, we have a 3-part option series, Options Made Simple, the Charting Wealth Way. It has gotten tons and tons of thumbs up. It is a great training. Patreon membership starts at as little as $30 a month. We so much appreciate that support. We have a lot of costs here, and you help us with those, and we sure appreciate all our Patreon members. Not only do you get the options training, you also get our once-a-month live question and answer session where we review the stocks you're interested in practice trading, answer your questions in a live telephone call-in format, which we record, and then, of course, send you the video in that for those of you who aren't able to join us live, but that is once a month, the first Wednesday typically of every month, along with our short chart training, our long chart training, our Bitcoin training, all sorts of great stuff for our Patreon supporters. If you don't have our book, Charting Your Way to Wealth, you need that too. We have an autographed copy waiting for you. Follow the link in the show notes. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.